And we learned that a gentleman named Barry McCarthy is going to become the CEO of Peloton. My first question about Barry McCarthy is, who is Barry McCarthy and why is he the right person for this job?
Yeah, I mean, I think a couple things, right? He has stood alongside entrepreneurs at Netflix, Spotify. So I think he clearly understands how to work with these kind of iconic founders. I think too, right? Both streaming companies. The hidden gem in Peloton, it's not the bike, it's not the connected fitness devices, it's the programming, it's the content. And I think over time, he'll help really highlight that part of the business. So I think you've got that. And you've also obviously, the management team's been in the press a lot. This is a fresh set of eyes. They've obviously articulated restructuring, but someone to take a clean set at this and really examine the business, I think can really help strengthen the parts of the business that are the strongest.
Is there anybody left to buy a Peloton or pay for its service? Or I think that's the fear, Ed, is that everybody that wants one now has one.
Well, two questions there, right? I think, they pointed out clearly that the existing user base continues to engage very highly with the devices. Now, maybe you're not using it as much as you did when you couldn't leave your home, but, north of 15 workouts per user per month is still very strong and ahead of pre-pandemic levels. So I think paying the subscription, no issue. The question on the device demand is a broader question. They've been trying to lean into this new device, the Tread. It's had kind of a slow start, but it sounds like momentum's starting to pick up. So I think this is an environment where lots of people like the subscription, keep the bikes, keep using that. And it's on Peloton to tell the consumer why they need to get some of these new devices like the treadmill.
Okay, so you're a little optimistic there on Peloton. $60 price target, Ed, is that correct?
That's right.
All right, so now let's turn to Lyft. Here's another story there. I want to transition, if you don't mind, Ed. Shares are down this morning despite a top and bottom line earnings beat. The problem for Lyft, riders coming in short of estimates. Management's tone was not good on the conference call last night, sort of predicting that the Omicron surge over the holidays is going to hit results hard this quarter. Still, revenue per rider up 14% a year, hitting a record $51.79. Stock's been hit, Ed. The one thing that shocks me whenever I get into a Lyft or an Uber, I always ask the drivers, some of them are annoyed by me, I'm sure. I always ask them how they're doing and how much money they're making, because the rates, I don't know if you've been in an Uber or Lyft lately, the rates are really high. The drivers say they're not making a lot more, but that led me to think the company must be, because the rates are up.
Look, I think the drivers are making more. What they're trying to balance, though, is obviously fuel prices are higher, insurance costs keep moving up. And so what they're putting into their bank account every month, certainly is a little bit more stable. But I think what you're seeing here is, just as they point out, Omicron, it certainly delayed the recovery. But, to juxtapose to Peloton, right? Peloton's going to have problems in a post-COVID environment. Services like Lyft and Uber should see more activity, right? Airport rides, while they're improving, still well below peak. So as people start traveling more for leisure, and then certainly, which really hasn't happened yet, more for business, I think that's where you're going to see that ridership data improve.
Yeah. Do you foresee a time when I don't know if we're going to go back to pre-pandemic, everybody was Ubering and Lyfting and whatever you want to call it everywhere. Obviously, that business got destroyed. The drivers, you couldn't go anywhere. Many of these drivers quit, probably permanently. How does that business look, a year from now, Ed, when hopefully the pandemic is well behind us? How does that look? Does it go back to just being like it was pre-COVID?
I think there's still going to be some changes, right? Lyft and Uber pre-pandemic were very promotional, right? You get discounts, free rides. I think that piece probably is something that we're not going to see return to the same extent. Both Lyft and Uber are probably going to try to reintroduce shared rides. That's going to take a while to come back, right? My willingness to sit in a vehicle with people I don't know, probably pretty low for an extended period of time. Airport rides, will come back for leisure. For business, will take time, right? I think businesses are likely to travel less than they did pre-pandemic. But the flip side of it is, they're going to pick up market share from things like public transportation. Maybe you're not comfortable getting on the bus or the subway immediately. And certainly, at least we saw this last spring, people are going to want to get out.